At times, they've had negative interest rates, which literally means that you can borrow money and be paid to borrow money. This is because Japan wanted to kind of make their currency more powerful, and it did work very well for a while, giving Japan a very strong, booming economy. And what happened is people continued to borrow money. So as you continued to borrow money to go and buy things like property, to go and invest in stocks and bonds, like all of the banks were doing on a massive scale, things were good. You could borrow money for free, you could make like 5-10% somewhere else. And what that allowed you to do, because it was seemingly risk-free money, was stack into more and more leveraged positions. However, this over the past few years has begun to change, and this is where the problems really started to come in. Japan decided that its inflation had got out of control. They needed to start putting up interest rates. And this is a big deal. Now, you probably realize this. If you've borrowed loads of money and you get a salary that kind of covers that, that's fine. But if all of a sudden those interest rates go up, then you start to find yourself in a bit of a problem, because maybe you could have afforded that £500 mortgage each month, but now you're being charged £800, £900, and that's a bit of a problem.